Hey investor friends, I'm Michelle Markey, and today I'll share some of my key takeaways and some practical applications of what I learned from Danielle Town and Phil Town's 2018 Invested book, chapter December on Living Thankfulness. And this chapter reflects on Danielle's journey in learning how to invest primarily during the year 2015 when her father Phil started teaching her how to invest because Phil is a successful investor. And so I recap some of what stood out to me, like how Danielle wrote that life without financial fear is freedom in a very real way. And she finally confronted her fears about potentially losing money when investing in the stock market. And she gained competence and confidence in her ability to invest. And so if we can read this book and take away some similar feelings in our ability to feel confident in going forward and making our first investment purchases, or maybe also selling some of our investments, then we've gone a long way in confronting a lot of fears that we might have had, and that it's okay that whether we've lost money or made money, it's important that we've learned from any mistakes and then try not to make them in the future. So I'm just grateful that Danielle and Phil wrote this book. And if you also enjoy learning from investors like Warren Buffett, Charlie Munger, just like Phil and Danielle do, I'd love if you could please like and subscribe to my video and YouTube channel, because that's what I'm all about, is to follow in their footsteps and try to invest the right way, the way that some of these greatest of all time investors have taught us. So thank you. I feel like Danielle's personal finance journey is highly relatable to many of us who were taught that we should go to school, do well, take on some student loans, and get a respectable job, and then hopefully we earn a decent enough income. But then she came to the realization that she was on a corporate hamster wheel that wasn't really leading her to getting financial freedom. And in fact, it seemed like she was just getting more and more mired in a hamster wheel that she didn't see a way out of, that was causing her to lose sleep and also to decline in her health. And she didn't want to have a lifestyle where it felt like she just had to keep working many hours in the day, and then her life was suffering because she was just working all the time and she didn't see the light at the end of the tunnel. So she put the intention out there into the universe asking, is there a better way than this, than just to be on this rat race hamster wheel, and to find a way that she could reach financial freedom sooner than just working until near typical retirement age in one's 60s and 70s. And so by putting her intention out there, the universe answered her and said, hey, you have an investing expert who can help you out, which conveniently happened to be her own father, that she, in her childhood and teenage years, didn't really want to listen to because she had some childhood trauma. And then that was a little bit of a wedge that was keeping her from trusting and learning from her father, as the book details. And as her father taught her throughout the year that she learned about investing, she began to forgive her father and learn how to trust him again. And in so doing, she ended up being able to trust in her own ability to invest and to face any fear she had with handling her own finances, and to come to realize that she actually can be competent and actually can do this investing thing. And it's not as hard as a lot of mainstream sources might make it seem like to be. It actually is more than manageable. So I feel like it's a really courageous hero's tale that Danielle has gone through, and all of us can go through what she has done, and to feel this sense of confidence and ability and competence that we can not only handle our finances, but also be successful investors. So I think that this lesson is one that's really worthwhile for all of us to learn. In addition, I think it's brilliant and big-hearted of Danielle and Phil to have put Danielle's learning journey and Phil's teaching journey out in the form of a free podcast that's been around since June 2015 for the whole world to be able to learn how to invest according to how Phil happens to like to invest, which he calls Rule 1 style investing, which he bases on Warren Buffett and Charlie Munger. And I just think that's so awesome of them, because they could have decided not to put on full display Danielle's Phil's learning journey, but from her lawyer background, she actually poses incredible questions to her father, Phil, who kind of looked at things in a very straightforward black and white way when it comes to investing in math. And she had struggled with math, and it's not that she couldn't do the math, but she just had this fear of numbers at first. And for her, it really was a bit of a struggle to try to come around and understand how to use different confusing financial numbers and figures from annual and quarterly reports and be able to put that in a format that was understandable and that she could actually use in a practical way to value businesses. And Phil had to really think carefully about what is the best way to teach this sort of convoluted investing material to his own daughter. And I just think it's awesome that we can have this free learning resource. And I'm grateful that I discovered it about 2 years later in the summer of 2017. And that awakened my investing journey to be able to realize that there could be more than just how I was investing to date. And I say this because even though I've known how to invest since the latter part of the 2000s, I wasn't really sure if that was the best way I should be investing, because I started out with my little Roth IRA account and just basically buying dividend stocks because I thought getting a yield was pretty decent on some of the advice of my older cousin. And then I realized that some of these stocks weren't really going anywhere, and I wasn't really sure why I was really investing in those stocks that I didn't know that much about. So I eventually sold these stocks in favor of investing in index funds, which was great for a while in the 2010s. And then I realized I still don't know what's really in these companies. And I also eventually got rid of my index funds and ETFs. And in doing so, I wanted to try to figure out how can I really understand businesses that are within my circle of competence based on what I learned from the Invested podcast and from the Invested book, and be able to invest in companies that I believe in, that I'm willing to hold for at least 10 years. Because when I came across this podcast, I'd been feeling burned out and feeling like there has to be a better way to also reach financial freedom other than just slaving away at my job and hoping that whatever I'm invested in the predefined few mutual funds and index funds I could possibly choose in my 401k. And it felt like back then in 2017 that wasn't going to cut it. And the last 4 years notwithstanding, where we've had insane growth in the markets, I felt like back then there wasn't much upside in continuing to invest in index funds. So I might as well begin to study companies, and then by ideally carefully choosing companies to invest in, like the way that Buffett and Munger do, that would be my way of compounding my wealth in at least 10 to 15% per year. And while time will tell if I'll be successful, I feel better for having learned a way that I can invest that resonates with my values, and that even though I haven't made buku bucks yet, I feel confident in my future investing abilities. And to me, that's more important than anything. And I can then also teach that to some of my friends and family, and also you as my YouTube audience, that I'm really grateful you're listening to me and watching this. And I really do hope this type of content is helpful to you, because it's been life-changing to me. And I talked about some of the 5 life-changing books, and some of which were Phil Town's original books, Rule Number 1 and Payback Time, that also made a difference to me, because it gave me a solid foundation of having formulas and a structure to follow to be able to value businesses, whereas before I would have not really had any idea other than looking at price to earnings and dividend yields, which I kind of felt like in the back of my mind weren't really good enough. And by following in Phil Towns and Danielle Towns' footsteps, that gave me a way that I could feel confident in proceeding with how I'm formulating my investment thesis about companies. And with that kind of conviction, I felt like I could sleep at night in whatever investments I had. And then if I needed to sell certain investments, I was doing it for the right investment reasons, and not because it was out of fear, like all of a sudden the stock market price is going down. Like, I had learned how to calmly look at my stocks' prices going super down and not really flinching too much, and just being willing to hold or hodl onto these investments that I believe were good investments and that I think would work out in the long run. And that's how I still feel today. So being able to have this type of fortitude and conviction is something that I'm grateful for, and learning from the Invested book and podcast. And I think that that can be tremendously helpful to anyone who's somewhere along their investing journey, whether you're at the beginning of your investing journey or you're well along your way and you just want to be reinforced in some some principles or learn some new techniques and methods of how to value businesses. And now for some practical applications for what you can do as part of your ongoing investing practice according to this checklist that Danielle included in this chapter, where you keep tabs on your wish list companies. So you put in a calendar when their quarterly and annual earnings reports will come out, and then you go ahead and read some of the newest changes in those reports. And you can also set up alerts through various apps and also set up email alerts so that you know when to check up on these kinds of reports when they come out with the SEC. And then you can also check your investment thesis story and see if there have been changes based on some of the latest news from the reports or other happenings going on that you learn from newspapers or other online sources. And you can then also figure out if there's a new inversion to your investment thesis. So if there's a reason not to invest, well, normally you would want to invest in the company, but what might have changed that makes this investment maybe not as good of an investment idea anymore? So you can make updates as you need to, and also recalculate the buy prices that you would like to set for your stocks on your wish list. So you would figure out the new margin of safety, payback time, and 10 cap prices based on the latest numbers from the quarterly or annual reports. And you also keep tabs on some market-wide indicators like the Shiller price to earnings ratio of the S&P 500, or also the Buffett indicator, which is the Wilshire 5000 total market to GDP, both of which are kind of nearing all-time highs or are at all-time highs. So that's a little bit frightening, but nonetheless, you keep just trying to do your homework and keep having companies on your wish list until they go on sale and they're available to buy at the price that you would like to buy them at. And then you also keep doing your research, and I like studying different sources online, and Danielle has a subscription to the Wall Street Journal, and I like to borrow it from my local library, so that's what I do. And also you can keep reading value investing books or also discovering new podcasts, which are a really great source of learning investment news and updates. So I think across many ways, as long as you're open to keep learning and keep pushing yourself to learn, I think that's the most important thing as part of this checklist, is to make it your own. And for myself, it's not like I'm so strict in having a nicely documented investment thesis, but I kind of formulate it across several spreadsheets, and I have some documents that I keep as articles that I've saved from online, and I might keep track of why I like to invest in this kind of company and why it's meaningful to me, and why there's reasons that I might not want to invest in this company, as you can see throughout some of my videos where I talked about case examples in Costco and Apple or Chipotle. And I enjoyed and appreciate how this book went the extra mile in providing an epilogue and afterword and resource suggestions for the reader of what to check out next in order to keep building on our investing foundation. And they also included appendices of some of the financial figures that they used and the formula examples they provided, where it shows how we can do step-by-step margin of safety, payback time, and 10 cap valuations in order to figure out a stock buy price for each of our favorite companies. And the only thing I wish they had in this book was an index, so I could refer back to some of the key concepts that they had in this book, but that's okay. And they also said to visit their website, so that includes danielletown.com, where we can check out several resources there and also figure out our number. And this is the number that we would like to have so that if we wanted to, we could retire early or not have to seek a job for additional income, and we could live on this number. So we could do that calculation either on her website or also on Phil Town's website called rule1investing.com. And there's also lots of other resources we can check out in Phil Town's website that I'm gonna just point out one example related to Apple shortly. And if we take a look at Phil Town's Rule 1 Investing website, tools and resources, I think it's pretty helpful, and it reinforces what we learned in this book. And these are all free resources that anyone can use as worksheets or guides so that they can improve in their own investing practice. So I think that's pretty awesome that we can see here all these kinds of quizzes and guides and calculators so we can figure out margin of safety or intrinsic value of our favorite companies. And let's say I wanted to do some calculations of a company company like Apple, I could check out their recent 10K annual report and taking their net income, equity, and debt, figure out what return on invested capital they're generating. And based on recent figures, it looks pretty good at 27%. So let's see if Apple can keep that up, because they've been generating monster revenues and earnings based on a lot of what's been happening throughout 2020 and 2021, where there's been chip shortages and a high demand of tech in order to do work from home or school from home. And looking at a margin of safety calculator, if I take the current earnings per share of Apple at 5.61, which is kind of high compared to how they've been trending at in recent years of like the high 2 to 3 earnings per share amount, and maybe I give them a back of the envelope future growth rate of 20% and a future PE of 30. And based on that, I get a margin of safety of around $130. And right now, Apple is trading at $160. So I would need to wait for the stock price to come down by at least $30 before maybe it's a good price to buy, or maybe that's not such a good price to buy. Like back in 2017, 2018, and even early 2019, I still thought Apple was a little bit pricey, and I committed the error of omission in not buying Apple back then, because even though it seemed in retrospect now that it was a bargain compared to what it's trading at more than 3 times the market cap that it was at back in January 2019, I still feel like maybe I made the right decision at the point in time where I was in my investing journey, because maybe I didn't study Apple enough to really understand its potential. And also with the low interest rates we've been having, maybe that's what has helped spur Apple to have such an incredible market cap of $2.67 trillion of a market cap right now. So maybe I just need to keep doing more homework and figure out what is a good price for me to pay if I really would like to buy Apple in the future, knowing that I sort of missed out in the past, but I shouldn't really knock myself for doing that. It's just another investing lesson to learn and to move on from. What's beautiful about having an investing practice is that it keeps pushing us to be lifelong learners and to keep challenging ourselves to try to be better investors and to keep making better financial decisions. And with having the tools and resources to do so, I feel pretty comfortable in doing that. And if you also read this book or listen to the podcast or check out their websites, I think that you'll also have the tools and resources you need in order to be a successful investor. And let me know in the comments what you think if you read this book, or if you have any thoughts and feedback about what I covered in this video. I'd love to hear from you. And also feel free to check out my playlist going month by month, chapter by chapter of the invested book. And I cover what I learned, and I tried to apply those lessons in my everyday investing practice. And I really hope that's helpful to you. And if you enjoyed this video or learned something, please like and subscribe. And I wish you well on your journey to being the best investor you can be. Till next time.